Today we're going to look at some more big names. We have Abbvie, GlaxoSmithKline, Bristol Meyers Squibb, AstraZeneca, and Amgen. And at the end of this video, I'm going to tell you which one I think is the best investment out of this group, and I'm going to also tell you whether I'm going to invest or not. And if you're new to my channel, well, welcome. My videos are about investments that anyone in the world can make. Now, generally, I focus my attention on the stock market because this is where I think the best investments are. But not all the time. Sometimes I look in different areas because at the end of the day, I just like making money and I like looking for new investments. There are lots of opportunities out there and I spend all day, every day looking for these. So if this interests you, please subscribe to my channel and follow along. Now, the pharmaceutical industry, well, it's a very profitable industry and let me explain why it is so good. So firstly, the Western world has an aging population, and with lifespans increasing, the need for better and better medicines also is needed. Modern medicine is the big reason why humans are now living longer and longer. And the second positive are the patents. A pharmaceutical company can have a cure for something and receive a patent. And this means they can profit on this product for years and years without competition. It isn't a fair marketplace and that allows for these big profits. But of course, it isn't a perfect industry and it definitely has its own downside factors. See, governments are often interfering. This unfair marketplace means companies can charge extreme prices because they don't have competition. Now, this makes people angry and complain to their politicians. Therefore, the industry can be subject to politics. And then there's the moral issue. And because of these high prices, well, it means that some people just cannot afford life-saving medicine. And when people are dying, yet a cure exists, well, that becomes a moral issue. And then there are the cheaper knockoffs. So companies in China and India are making knockoff products outside of USA jurisdictions. And this is making it hard for US companies to protect those patents. Now, the industry, well, it's not for everyone. And personally, for example, I don't invest in, say, cigarette companies. And it's mostly because I just don't feel comfortable on a personal level investing my money into these cigarette companies. But it's also because governments can really interfere with what goes on for the profitability of these companies. It could be a perfectly good investment and going along really well, and then the government changes something and then it ruins my investment. Now, it's not just an ethical dilemma because there's really ethical dilemmas in pretty much every space. So I try to take a step back and just generally decide whether I think the core business is good for the world or bad for the world. Now, that's just my style, and I'm sorry for going off on a bit of a tangent there. Let's get back to the pharmaceutical companies for today. So I've actually done a full analysis video on Abbvie before, so if you want to deep dive into the company, well, I suggest going back and watching that. But here are the basics. So Humira is their biggest and best multi-billion-dollar drug, and it's a strong anti-inflammatory. Humira's patent will expire in 2023. And Abbvie recently acquired a company called Allergan, which holds the Botox patent. So they hold some pretty important and very popular products. So British-based GlaxoSmithKline is best known for its consumer products like Voltaren, Panadol, Sensodyne, Nicorette. The list is really long. But they are also a big player in the vaccine and prescription medicine world as well. Now, on a strange side note, I was actually offered a job at GSK about 7 years ago. I turned down the job, but there's some really good people working there. Now, GSK, I think, is most famous for developing the first malaria vaccine. This breakthrough saved millions of lives. So that is a feel-good story that big pharmaceuticals definitely need to promote. And like I said in the previous video, well, all pharmaceutical companies have done scandalous things in their past. For example, back in 2012, GSK was found guilty of promoting their drugs for unapproved uses. It's like someone saying that this athlete's foot cream can also help dry skin on your hands, but they don't actually know if the cream will work on your hands. Bristol Meyers Squibb, another company with 3 names. Now, they're famous for blood clotting treatments, plus they have just acquired another giant called Celgene, I think. So I will have to assume their debt will be high. Now, one strange fact is that the Squibb part of the Bristol Meyers Squibb, well, they provided medical packs containing morphine and surgical kits to the Union Army in the American Civil War. It's a long time ago. More recently, from about 2000, the company was involved in many lawsuits, typical of the entire industry, really, from holding a monopoly on cancer medicine to accounting scandals. Like I said earlier, because the industry deals with the life and death of people and that there is a lot of profit to be made, well, the industry gets a lot of political attention, something I don't like about the industry. AstraZeneca, a British-Swedish company famous for cholesterol reduction medicine, definitely a big player in the pandemic vaccine race as well. Now, rather than developing their own unique medicines, like most of these companies in the top 15 of the world, they find it easier just to acquire smaller companies and buy the patent. Then, with their bigger marketing budget, they sell the new product and make a fortune. So innovation amongst the big players isn't what it used to be, but as long as they keep paying big money for smaller companies to do the development work, then it works out okay for everyone. Let me explain. See, the smaller companies are incentivized to develop and patent a new superior drug for a specific issue. Then, a big company like AstraZeneca is incentivized to pay big money for the patent so they can add it to their diversified profitable drug range. Now with the marketing budget of AstraZeneca, more people in the world can get access to the drug. More people benefit and profit is made by everyone. Now, Amgen is considered more of a biotech company, and the difference between a biotech and a pharmaceutical company is in the process of how they make their drugs. See, pharmaceutical companies use chemicals, and biotech companies make drugs on a biological basis. Now, Amgen, they recently received FDA approval for their new leukemia drug, which has very big potential. Now, I added this one in today's video, even though they are a little different to the others, because I have been interested in this company for a while and I wanted to analyze it. Yeah, I know, kind of selfish, but maybe some of you will find it interesting as well. Now, biotech companies are a little bit overhyped generally, so I want to proceed with a bit of caution here. So now I'm going to take a look at the financial position of all of these companies and compare them against each other and see which one is looking like it's the best. Now, there are three key areas to the health of any business. That is, can they handle their debt? Are they growing, and are they a well-managed company? And after we've had a look at these areas, we want to see whether we can get it at a good price. Here in table 1, we're looking at the debt. And for the debt to equity ratio, we want this under a 0.7. Anything above a 0.7 puts them at a little bit of risk, because if something was to happen dramatically to the company or the industry, well, they would still have large repayments that need to make. And if it's under 0.7, well, they should be able to handle those repayments. The current ratio just signifies what they can do in the next 12 months. So anything above a 1.5 is good here, which means they can handle their short-term debt. Below a 1.5 means it's starting to get a little bit tough for them to handle it. And as you can see, well, Bristol Meyers Squibb, they're nearly okay, and Amgen is okay from a current ratio perspective, but debt is a big problem here with these companies, and a lot of it's because they're always acquiring new companies. Now here in the next table, we're looking at the growth of the companies. So we've got earnings per share and book value per share. What we really want to see is an upwards trend in both of these areas. It just means that they're growing year on year. Now, Abbvie, GSK, and Amgen, their earnings per share has been growing, but only GSK has had an upwards trending book value per share. So here in the next table, we're looking at how well the company is managed. And return on equity, well, that's simply just how good is the company at making money with the money that they have. Now, we normally want to see this number above a 15, and all of these companies are showing that historically. And Abbvie being the massive standout here with a return on equity of 100, that is gigantic. Now, Abbvie also have an upwards trending free cash flow, which is fantastic to see as an investor. Their dividend yield is quite high at above 5%, and they have a good dividend safety ratio. Anything over about, say, a 0.7 here would be maybe the dividend's going to get reduced at some point, but anything under that is fine. Now, here in the last table, what I have done is I've calculated the intrinsic value for each of these companies, what I would consider my buy price, and then the current price right now. And if you're interested in learning about how exactly I calculated this intrinsic value and my buy prices, well, I have a video that I've done previously called How to Calculate Intrinsic Value, and I have a free calculator in the description below, which you can have, and that'll help you calculate these numbers. Now, if we look at the current price column, you can see that the numbers here are all above my buy prices. Now, Abbvie, they're probably the one that's closest at $92, where my buy price is 78. That's not that far away. And maybe Bristol Meyers Squibb isn't that far away either. Now, the intrinsic value and my buy prices are actually quite difficult to calculate accurately, because what I'm doing is I'm trying to predict the future. So it's definitely not a perfect science. It's definitely more of an art form. So just getting close to the numbers that I'm looking for, well, that's probably a really good sign. So Abbvie and Bristol Meyers Squibb, they're probably close enough. So the only one that I would give a definite no to here is AstraZeneca. The rest, you could argue, all have a case to be made. For example, so Abbvie has very strong earnings per share growth, amazing historical return on equity, free cash flow is also growing, which is great. They have a high dividend, which is a bonus, and they're really not that far away from a good price. But they have risks at the moment as well, especially with that high level of debt. Now, this is closely related to the Allergen acquisition. So they are at risk at the moment. They probably will be fine, but it's higher risk than I'd like to see. Humira, their number one seller, well, it'll be out of a patent in a few years' time. And then there's all the other risks associated with the pharmaceutical industry as well. Now, investing in a company like Abbvie, well, I wouldn't be overpaying by a whole lot, but I just think there are far better investments out there with far less risk. See, the industry can change very quickly because of a government decision, and I'd much prefer my investments to be away from the political spotlight. So I really wouldn't invest in any of these companies. I'd much prefer something a little bit more boring and a little bit less in the limelight, something like insurance. And also, I'm not a scientist and I'm not in the medical field, and I have no experience in it either. So I don't really understand the market dynamics very well. Now, for me, because I don't really understand the industry very well, I don't see it as a very simple business model. Now, For example, the oil tanker industry, also I'm not involved in that industry specifically, but I think the business model is really simple. So biotech and pharmaceuticals are just a little bit out of my depth. So what do you think? Do you disagree with me? Let me know in the comments below. Now make sure you subscribe before you leave, because my next video I'm going to look at some more pharmaceutical companies, and I can tell you now, one of them is really undervalued. And thank you for making it all the way to the end of this video, and I will see you next time.